May 2nd. Yeah, unemployment claims come out today, 8:30. So let's take a look. What's going on? So I got my Top Step account back. So let's log into that. And as we do that, we're still trading in these micros for our app account. Keep that going. And again, the goal is just to trade one macro. We see a really good setup. We can bump that to two. Oh, sorry. Today's May 2nd. Um, Here's a new driver came out. So we got our Top Step account back again, and we're gonna trade out of that with minis, and then we'll continue with our macros inside of our app account. So right now we're sitting close to 2600 in our macro. Pretty good. Let's see if this is the one. Yeah, this is it. 68. Yeah, this is the one. Yep, so keep that up. Uh, she don't want to connect to paper trade. Not here at least. Oh, we do have that Leap account. I don't know, that Leap account right now is a distraction for me. So, no, we got to the end of the month for that. Be cool to get another, so we have just more accumulation on NQ back into this fair value gap. It's like it's just consolidating, so we're waiting for like we may come down into this discount down here, which will give rise to our indexes. Stage one, this would be stage two, run up. Although some could say this is stage one. Technically, we have a new swing high here. Run up, come down, run back up. Stage one, come back up here. Stage two, maybe take out this optical trade entry, fair value gap. Then we come down. As that happens, Dixie can very well come down here into this premium or discount. Bullish for the block, mean threshold of this inversed CIBI, and then move up higher. So that's what I think could happen, being bullish. I want us to, knock out this optical trade entry here and then continue going down, but I guess there's a lot of manipulation in the market, as they say. I don't know if that's true or not, but whatever. So this here, I'm working on a theory. Um, I won't go into details because it's top notch, it's top secret stuff. So this is where we are in 4 hours. Still working in this 4 hour BISI. We do have a down closing candle, so this looks like so bullish for the block. Um, we'll mark this out as a bullish for the block. OB. We got some accumulation on the 1 minute. See where that goes to. 4 hour. So still within this range here. Boom, boom. We just took out these lows right here from Wednesday. So I'll update this is our new sell side liquidity. And this is our previous day high up here. Previous previous day high, and this is our previous day low. Obviously, we do have an immediate rebalance right here, so I don't know. We'll see. We'll see what's up with it. We could take this here down to here. Optical trade entries here within premium. Nice little fair value gap here in premium, but let's see if we can get through this inverse this, and if we do, we definitely will climb up in there. I don't know if we'll get there today. Tomorrow we have non-farm payroll employment changes at 8:30, unemployment rate. So we'll see. We might get something to work our way in there. So same thing with dollar, or not dollar, but with the hourly time frame. This fair value gap here was inverse. We have a bull short block, so looks like we're bullish. Came down here nicely. Any manipulation legs? We could take a look at this here and extend this up. And like we're way up here, premium. So 2.5 is an optical trade entry lane. 2.5. Got some buy side liquidity up there. That's if we consider this as manipulation. Again, this happened at the 9:30 open. This accumulation, drop down, boom, and that's it so far. So this here is our buy side liquidity. I hope these are sinking globally. They need to sink globally. Sink that globally. All right, because this is where we are currently. Right now, we're in the manipulation phase of. Uh, Here, let's just. Um, cool. It would be cool if like we can sync stuff from the mini chart to the macro chart. Prices, damn near identical. So it's like, why not? So this is where we are for today. Um, here we are up here. This is our sell side liquidity for real. Should be buy side liquidity. This is our order block. So we'll see. Do a very inefficiency up here. What is this? Oh, this was inversed. Ignore this. So we can expect shorts up here. Again, we are stuck within this range. Where are we within this range? Let's take this low here. Move this up over here. Quad. Oh, 50% with this here. So let's see if we get a 5-minute chain instead of delivery. Then we could very well trade short. What? Yeah, this one. Oh, we went to New York. Well, that's where we just opened up at. So do have a 5-minute chain instead of delivery. We got 4 minutes left. Maybe we can get a wick. you were to short here, target these lows down here. 12 equal lows down here. Do a fair value gap here on the 15. Retracement leg potentially. No inverse fair value gaps, no 5-minute changes, status of delivery. It's the sell side down here. Let's mark this out. Do we have a little inefficiency down here? Fair value gap. We might tip into that. So potential inverse here on the 1. Oh, we had it right the first time. No market structure shift. Optical trade entries up here. We inverse this. I'll take it. Good chart for up here. This is 639. To route. Oh my God. So this appears to just be consolidation. I think buying here would be a good idea, but what setup do you see, right? So with that being the case, I'm gonna get up and walk away. All right, so I'm back. I see why like having a 5 minute chain instead of deliveries probably your best bet when entering on a trade because I mean we do have an inverse here. Uh, But ideally, we're inside of a range right now. We just inverse this one here, and then we just inverse this. So you went in on a call for this one when you forced to go back. So you got to keep in mind when you're in a range like this, it's best that you don't try to force your hand to take a put position. So top step, we're at basically break even, down $5.60. Amp, we're down 25 bucks. All right, so coming in Q2, this might be a bullish short block that we may tap into after we get over Q2. Very good. And maybe come up to this 15-minute BIST, taking out these highs up here from the morning session. So let's add this up here as why is this here? This here. Why is this here? So I'll be cautious about taking that projection because we are stuck within a range. You want to take the projection within the respective range, the parent range. So it's like someone's lines up. There you go. So come down, short entry here, but if we reverse it, boom, hit that a few times. So all right, so we're in Q2. Let's see what we get here. This looks like some jigger jagger consolidation. Equal lows, inefficiency here. Five imbalances. So this is consolidation. It's best to wait till we get out, then to look for a position. Otherwise, if you're in here, you're just gonna get chopped, moved up and down, up and down. And you really want to have a good projection to take your call to. And one can see this as bull short block right here. So if we were to project this, nice. First retracement, boom, nice. See this consolidation, consolidation. So with that consolidation, now we get a for value gap. Take the last one here. This is our terminus, and we are in a new quarterly shift. I don't see any change in states of delivery just yet on the 5. All right, so now we have it. Accumulation, manipulation. All right, so again, we're in consolidation. The rules for consolidation is wait for your change in state delivery followed by like a bullish order block. We currently don't have that, and we're like itching to take a trade. And I do believe this here will become a possible 15-minute order block. But if we were to get in here, stop loss would be here, right? And take profit, I guess, up here. But again, we're in consolidation and you're looking a bit too deep into things right now. So there isn't a clean setup, you know. But this might be it. We might have accumulation, manipulation, distribution. So let's measure this. You know, if this is the case, then that's fine. We'll take a short up here and then take it down here. All right, so this is a trade that I want to miss. Whatever price action happens here, I want to miss it. I don't want no parts of it. I just want to sit back and observe, and I want to see one of my textbook clean setups come to the fold. Let's see if we can add that notch to our learning P&L. So looking at this, it's just it might just drive me crazy. So we can measure this out here. And what is this telling you? All right, -1 is here, retracement. All right, so it looks clean. And maybe now we'll continue moving higher. This is mean threshold up here. So when would you want to take a trade? At what time? All right, so right now it's 2:14. It's 1 o'clock. So this is around the time that I would like come in for the afternoon session. It's at 1 o'clock Eastern. So we have mean threshold here, 5-minute chain of state delivery. If you were to get in here, stop loss 10 points. That's here. It's below here. Take profit, what, 20 points here? But again, like what setup do you see that you can write down step by step? If you were to write down step one, what's step one of this setup right here? I don't know what step one of this setup is. So right now we're thinking with that fear of missing out. We're seeing it move up and up and up. You see a 5-minute change in state of delivery. That's number one. Number two is, all right, so we went to mean threshold. Okay, but number two is where's your number two? And you might drill down to a lower time frame, see where we came down here. But again, like I don't see anything that tells me go in for a big size and take it and allow it to run up as high as you possibly can. Just because we're moving up and down, that doesn't give me conviction that this is a setup that I can replicate. And I can't. I don't know if I were to backtest this and say, all right, this is where we missed, where would that be? So for that, I'm just gonna bow out. I'm not, I can't front like I see anything. But all in all, this is just textbook consolidation. This is just really good consolidation, and my eyes is focused on the 5 minute. That's why I had the five here. I usually keep the one on either of these panels just to see where we are within the respective 90-minute cycle quarter. All right, so here we have some takeoff. I want to see a move up in here. So this is here, 5 minute training set delivery, moving up. So if you are in a call position, I guess sit on your hands. Um, and let that be that. So I'm about to go get something to drink. I'll be back. So within this range here, premium discount. Discount, we look for down closing candles as order blocks. So you had an idea, I think it was this one to be an order block. Turn out this one's the order block. And on the lower time frame, what you did was a very good job. Uh, we took this here and got our boom terminus, and then that went up. So this confirms that this order block right here will be this down closing. These down closing candles will be an order block. So that's good. That's really good. So 208.16. We'll take note on that. All right, there we go. Now we're taking off. Notice how we get a quarterly shift, down closing candle in that quarterly shift. Turns out to be a 1 minute chain and state of delivery. Come back down to it and boom, take off. As well as we have this 5 minute chain and state of delivery right here, right? And then in this 5 minute candle, we come down into the state chain and state delivery, and now we're going up. So I had projections for this order block here, and retracement is up here with this optical chart entry. We'll see that. Oh, this also lines up with this 5 minute change state delivery as well. So not bad. Let's take a measure of this one here. Wow, that looks pretty good. Even this looks good. So let's go on to 15. So we may see accumulation. So don't get too committed to the 15-second. Here, let's look at this one. Oof, 2.5 is here, so keep an eye out for it. This might be us. Q3 coming up, 5 seconds. Potential breakaway gap. Retracement perfectly. Two 2.5 is here. I'm out there break even. Maybe we closed that a little bit too early. What fair value gap is this? 2.5 is here. This is a 15-minute fair value gap. I wanted it to be inversed, but looks like we're not going to get that. If we were to re-answer here, this is a good measurement. Oh shit, we went to New York AM, a New York afternoon open. Ah, should have taken my first exit there. All good though. I mean, if that's the case, do you want to go long? I'll take a long position. I want to get out of that. Go back in for a short position. Bear short block here. If we can inverse this, will be good. This 5. So we're out there as well. 227, what the fuck? Pull a short of black. And where do we take this to? Up here? Would be nice. Again, optical trade entries up here. I'll just buy, sell, buy, sell, buy, sell. Nah, Trace, that's not the way. Q4 coming up, maybe reversal. Inverse this, run up, took out these highs, came down, boom. Maybe we can get a wick down here. So we're running into optical trade entry, close to Q4, like a couple of minutes. Look how we just came down to this 15-minute order block. That's what this was here. Look, that's what this was here. Do 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 do. That's what that was. There's a retracement to higher time frame PD array. All right, I need to walk away. Uh, right now, mentally, I'm pretty tasked. Seeing run up like this, they're just eating me up. So that was a 10-point move. Yesterday we had larger runs yesterday. But today, we're definitely green on a day. Yeah, so P&L's 1150. Maybe after commissions, that will break us even. Uh, top step account. See, look where this goes to that bullet shorter block. And now look what we do. Take off. So that was a good exit. Very good idea to think to go short or to get out there. Um, so we just went to mean threshold on that run down. That was all on the 15. Okay, I'm done for the day. I'm gonna allow myself to get up and walk away. So we're at 2150 for AMP. Took quite a few trades. Top step we're at 550 for top step. But right now my nerves, you can probably hear it in my voice, it's getting the best of me right now. Um, I was hoping that this Q4 we would, reverse. This is this is perfect. We come down to obstacle trade entry, bullet shorter block, 15-minute uh mean threshold, and this is a fair value gap. Come right to the low of it, and then on the 15 mean threshold. So it's always important to ask like, what is the chart telling you? So in this case, where are we trying to go to? We have this hourly civvy here, whatever you want to call it. Right now I don't know because I'm a bit irate right now. Um, I'm just gonna get rid of this, and we can come back and look at this video some other time. But we could get our reversal here. This could be our accumulation. Two 2.5 perfect reversal. And then on the 15-second, we have 2. Come down to this fair value gap here. We do have a quarterly shift over here. For this, we may accumulate here, run up, and come down at this quarterly shift. Alternatively, we may come down optical trade entry down here, run up, come down. We may have a down closing candle only for that to be a bullish shorter block, run up. All right, I'm getting rid of this. I don't need this. This is optical trade entry on the higher time frame from yesterday's range. Thought that would have been an area for us to get a setup, but we don't have one there. This is just a fair value gap. So if we look here, this is like the 5. This is our 10 a.m. reversal, taking out sell side. Stage 1, stage 2, accumulate. Then we move stage 1, stage 2, run up. This might be accumulation. This might be our manipulation, and potentially get a distribution in the last quarter of the hour. Actually, so, wait, this 15 BISI is not correct. It actually starts here and goes up to here. Well, that's a 5. This is a 5-minute BISI, excuse me. Or SIBI. Even on the 15, it's like a lot larger. What about the hour? No, it's a 5. If we put that up here, so yeah, so this was our accumulation. And then we get this run up here. We just go there, just boom, we hit that. All right, accumulation again. Run up, stage 1, stage 2, and now we're moving up. Here's 4 standard deviations here. This is the, I guess, the last. So 1.5, 2, probably 2.5 up here so we can get a retracement, reversal. Two point five is here again, reversal, accumulation, manipulation. This looks like distribution. So also could be a bullish shorter block. What else could we do here? It's this 2.5 again is here. Let's just paper trade this. Get the reps in. Sell there. Stop loss 10 points. Good. All right. So here, 4 goes all the way down here to our terminus. So that looks good on the on the one. But again, you got to do a better job at looking at your market maker model. So that's the takeaway from today. I have to go trade entries here. Right, what 618 is at? So for the 5, um, I measure this one here. This order block here went right to 2.2.5. So ideally, you want to put your stop loss there. And then also, this is a 1, 2, 3, 4 counter run. So we're trying to catch the top, kind of trying to catch the top, and like I advise against that because we missed this market maker model right here. Here's our last accumulation. Stage 1, boom. Stage 2, and we even get accumulation right here. So if we take this OB here, this is terminus. All right, we're accumulating. Run up. Stage 1. Run up. Stage 2. Boom. Stage 3. That's what I see. That's what I see. And then we have four standard deviations up here. So this is all looking bearish to me. And we're in a discount. I mean a premium on a higher time frame. So this looks, I mean, this is bullish, but again, I want to look bearish. And here's a constant encroachment of the 5, where our optimal trade entry is. We go to the 15. Here is our mean threshold on the 15. Well, that's a 5-minute SIBI. So we would have been stopped out here. This is 10 points. So right now it's 653 on the Top Step account. You love this 15 second, man. You love this 15 second. You got to be careful with the 15 second. All right. You got to be able to see your higher time frame runs. So just ease off the 15. There's a lot going on the 15, and it'll trip you up. It'll cause you to think that a strong down closing candle, although it did hit 2.5, is the move to go. Like it's supposed to hit 2.5, then reverse, only for it to hit a higher time frame order block, right? And you can even think about it too. It goes to 2.5 and it comes down to hit to a higher time frame order block. That's where you enter. No different from what you're trying to do on a 1 and a 5. Look how you're looking at the 5 and the 15, and you marked out earlier that 1 hour order block. You're on a 1 minute. You come down to it. You take a call position. You look for a call position. And that bearish shorter block, let's say up here on the 2.5 is going to end right there on the bullish shorter block. So you take it. That's why you want to use the 15 when you're going into a higher time frame PD array. Not with the 1, and in most cases not with the 5, but higher. All right. Otherwise, we're flat on the day. Uh, P&L was pretty good. Learning P&L today is pretty good. So we're in the last hour of the trading session. I usually don't stick around for this. All right, so now we're in Q1, and we look like we have a 5 coming up. Here's a 1 minute chain instead of delivery, or 5 minute chain instead of delivery with 2 minutes left. 5 minute bullish shorter block. Let's see what happens. Came back up, optical trade entry. And when we come up here, I'll admit, when we come up here, it's like we're moving higher. We're moving higher. 1, 2, 3, 4, 5 kind of run. Gotta understand when you're up here in a premium, gotta go short. Your stop loss will be much more quicker. And you're thinking, man, this stop loss is real quick. It's gonna get nicked. You want that versus getting in here, then that motherfucker going all the way up here for it to get nicked. You don't want that. Like that's too many points for me. We look for 50 point moves. So that lines up nicely with what we have right here. And also 2.5 reversal right here. 4 is down here. Take profit. Down here, that'll be our first exit. Although we could target that. And it's 5. We still got some more seconds left. Breakaway gap right here, potentially. And what about our twins? This will be a change instead delivery with our whatchamacallit right here. Uh, let's get rid of this. And we can see that from here to here, let's wait, let's wait. We're playing the twin setup. 50 seconds left in this 5 minute. Bull short black right here. Let's take this one on the 1. 2, 145. So this might be our retracement. So this might be our low for our twins setup. 50% is here where we got in at. We want to see a 1 minute change instead delivery, which could be this candle. Hypothetically speaking, if it were to be this candle, the measurements on this is 4, 2.5 is down here. So maybe we go a little higher, a little higher. But today's bullish, man. Is bullish. Up, down, up, down. Now I know my weakness is jumping in on the bull ride, and I have to start seeing these order blocks here as entries when going in on these bull rides. And look, I told you, I told you, I told you. Again, if you don't have a 5 minute change in state of delivery, look where this is going. 225 is here. And look where we come down to. This is a 5 minute order block. So the 15 seconds is going to give you a lot of information, and the weight of that information is, a snowflake compared to a snowball. This higher time frame is your snowball. Like this five, the five is beautiful. I mean, look at this run that we could have gotten right here. Here's your 25-point move right here. Here's 40. Here's 50. But you see this is like, oh, it's scary, it's scary, it's scary. Only for you to measure out this last OB here, as ugly as it looks. And we come to 2.5. Perfect. And now we're moving up. So, you have your notes here. Fast impulsive moves is the crack of the whip. Look for projection on low time frame, 15 second. Expect price to reverse and run. All right, so here's another example of that. So we can see this as accumulation, manipulation, distribution, right? And notice where we have our fair value gaps going. You saw this fair value gap, but this didn't break accumulation. This one kind of did. And you have 2.5 here. Reversal. I'll have to go try it. Yeah, all that good stuff. Instead of buying up here, and on the 15, we were looking at this order block right here. 2.5 is way up here. One, what you hit, boom, retrace down, run up 1.5, 2. I know you see that, right? We're gonna work on it. We will work on it. It's just like right now, I feel like, damn, damn. It's okay. Inverse fair value gap on the one. Here we're going down, coming down. You stuttering, nigga? Here we be. All right, bullish for the black. Boom. So what can we do? Take this here. Boom. 15 second. Boom. Now we're in. To 2.5 lines up nicely right here. And look, smoked. Oh, it didn't work this time. It didn't. Why didn't it work this time? Well, you're in a new quarter, first of all. Q2. Boom. And what can we see this as? Bullish order block. This is the 5. We've got 2 more minutes left. So this is where you are playing double dutch. It's like, all right, well, that's where I'm supposed to get in at, right? And then what happens if what just happened happens? Where do we get out at? 10 points. Right here. We would have been knocked out, right? Second thing is uses 1, project down, 2.5, 2. I mean, is this close to perfect? Is this not reversal? But we've been trending up all day, trending up, trending up, trending up. I mean, that's one of the things you have to do is you have to look for your inverse OB, your order block, and that aligns with your bullish order block, right? And we kind of know this is like -1. I don't know. Preferably down here would be better. And then you have to measure premium discount, draw on liquidity here. Can we come down and get a market structure shift? Mm. So what are you thinking right now? You're just staring. We ran up into this 5-minute order block here, or SIBI, and we're way, way, way high in the premium. Shouldn't be looking for calls here. And I know to your point, we've been looking for short, short, shorts all along, but why not? We're always late to the party. So you can't go with your first instinct. You have to question your first instinct, ask why, and then move accordingly. So the option call that we had yesterday, it's at it's at 96% return today. It's at 97% return today. 98. I bought this yesterday. 100% return. This is options. Now, if that doesn't give you some type of conviction, the other thing I do is look at like where was our higher time frame drawing liquidity? Where would the next one be? The higher time frame was the hourly. See? This might be our 5 minute change instead delivery right here. Again, we didn't get any market structure shift. I mean, these are equal lows on here, market structure shift. Come down. I mean, usually get your market structure shift after you get your drawn liquidity. Boom. All right, Q2 coming up. 5 minute change instead delivery coming up. So you could trade the 15. It's gonna be up and down, up and down, up and down. You gotta be in, out, in, out, in, out. I don't want to do that type of trading. I just want to put a trade on and let that motherfucker run. That's it. So we'll get there. Takes practice. All right, so we're coming into Q2. One, two, three, four, five kind of run. Premium, inverse fair value gap. If we go short here, stop loss right here. Take profit. Let's go with 100 points. Let's come down here to the New York afternoon session. This is a bull shorter block here on the 15th. It's here. Boom. Okay, now. So now we're scary. Like we see those green candles. Why are we thinking short? We should, jump on the ride and go long, right? But given where we are, it makes sense to go short. This is a risk worth taking. Before, hindsight is 2020, but those are all long positions, and we're looking to go short, looking to go short, looking to go short. But we didn't have a classic AMD setup on a 1 minute time frame, nor did we have a higher time frame draw on liquidity. We're stuck between a range. So the fluctuation that we saw was expected. In fact, you can entertain a 15-second here. Look at this one. Secondly, is where's your manipulation leg? You can play the entire daily range just based off of a higher time frame manipulation leg and just allow price to fluctuate all the way up to your target. Right, looking at this OB here. Can we come to negative 2.5? That would be insane if we did. In the last bit of time that we have here, that would be 114 points. So far today, we've come down near 300 points. Here's 4 standard deviation. This comes to -1, 4, -1. Notice all this resistance to go down and continue going down. Means price is bullish. Stage one, stage two, stage three, run up. I don't like this one. This one's a bit too high for me. Look at this one here. -1, -2 is where we go. Retracement. Now, why is this trade working in our favor? Other than the fact that we just got done with this 5 minute market maker buy model, then we accumulated going to a quarterly shift Q2. Flew to this one. This is a 15 for value gap. No, it's not 15. Oh, it's a 5. There's another one below it too. So for twins to work, we need to run back up here, get a 1 minute change of state of delivery, then take it to the downside. Traditionally, this is usually when we start trading around two. Look at that. So this is the 5 minute marker or manipulation leg, first stage of retracement. And then on that 15, that wick or the entire order block, this was 4 standard deviation. I'll show you. Oh, this is 1.5. I was looking at the wick here. Lines up perfectly. Fair value gap here on the 5, forming potentially. We do have a 5 minute change of state delivery. All right, so now we're coming back up. Get a change of state delivery with this order block here. Let's see where we're tracing to. Way up here. Uh, Forced deviation of this is almost on here in consolidation. We started consolidated stage one. So you can say stage one, stage two, accumulate, sell accumulation, or stage two. And three, run up. Boom, 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 boom. That's kind of like what you want to see. You want to be able to identify those stages. Here's your manipulation like low, high, lower, low. And where do we go to? 2.5, 3. Those are the trades you want. So uh, I think I came in rushing today. I think I came in rushing today, and this comes with experience, knowing that all right, this might be our to be our chain state delivery, knowing that um, you can come in when you came in and look to go with the market, or you can look to anticipate the reversal of the market, which you should do in both situations, but you have to think which one is higher probability. The fact that we have this manipulation leg right here, accumulation, manipulation, distribution, right? We'll measure this again. Boom. 2.5, 1.5 is where we get our first retracement. We got that. 2.5 is where we can see smart money reversal. And then looking at these pretty much look identical. And we come to this uh, SIBI here on the 15. Same thing on the 5. No SMTs specifically. Um, you could just find get rid of that. But look, I mean, we have the 15 Civi right here, and then you have your projection from your 5 ending right near it, and then you had those other projections from the higher time frame, all there in your favor. That's it. So we didn't come in and we didn't see that. So it's like you come in, you have it right here, confluences, high time for confluences, OT, order block, fair value gap, pull liquidity, market maker model, and what else? Projections of manipulation leg and change the states of delivery. That's it. So, uh, yeah, we just gotta make sure we do that now on. So that's it. That's all. So here we go to internal range liquidity, down internal range liquidity, potentially down here. And look how this OB lines up. 5 minute trade instead delivery, 4 standard deviation lines up. See, these are the trades that you take. These are the trades. And you're feeling anxious, man, want to get in, 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 I want to get in, I want to get in. Happens. If we can come to 4 standard deviations down here, this is a 12 to 1 risk to reward ratio. This is 121 points. Let's buy another one. Oh shit. Whoops, I didn't mean to do that. 1.5 retracement. We thought this was going to be our change instead of delivery. This one on the one. No. Here's a 5. Is this going to be it? No. This one is it. And then you have to look, where are you getting your chain instead of delivery at? Is it at the terminus of a projection? Yes. All right, you good. So this was inversed. We're just coming up now. All in all, good day. We got data coming out, releases, news release coming out. Uh, what they call it, earnings coming out. I'm not gonna sit around for the fireworks, but I'm done for today. Good job, very good job. You ended up flat on the day, but exceptional job. Stay away from that 15 until we are at a higher time frame. Point of interest. I mean, we thought we were with these projections, but again, you didn't. Your projections were off because we didn't get a good read on our market maker model. So focus on your market maker model, and look at your OOBs as well, and you'll be good. You'll be good. All right. So love you. Good job. Talk to you later. Peace.